Hello, today is Wednesday, the 3rd of October, 2012. More of the same old sideways nonsense that's been going on for pretty much the last 3 weeks. Possibility we may have our second consecutive inside day, inside period in a row, as on Monday it encountered an outside period. An outside period is where the highs and the lows are, well, bigger. The high is bigger than the previous day and the lower was lower than the previous day. Where an inside session means the high is lower and the low is higher. I'm going to quickly zoom in on this. Maybe it'll be a little bit easier to see. There we have it. So you got this high, and then you got this little thing in here. It's really very indecisive, to say the least, but the bias, again, still to the upside. You have a rising 18 period average, and I was even commented before that this looks very similar to that of an inverted head and shoulders pattern, and really the reason for why head and shoulders patterns work, well, it's got the exact same formation. It has to start off at a point and then go lower, back to its previous point, and then make a new low, and then go back to its previous point, and then make a higher low but have some sort of correction. And then upon the breakout, that's when things look very bullish. So it's the exact same sort of formation that's in play as an inverted head and shoulders is also. As far as looking at this from the on the hourly chart, let's take a look at this. So we'll take a look at the move that took us to 35.40 on Monday. When you have these breakouts, it's very common that you will have the fast moves that will take it there, but B, if it is that of a legit move, at least for that time frame, then very often the only correction that you're going to get would be a 38.2% retracement from the breakout. I'm recording Fibonacci from this point, and the breakout is from this point. Now, I already talked earlier on Monday about this possibility, how it didn't find support, and really it went from what looked like a possible breakout to just adding volatility within the market. Well, since this point, we'll take a look at this low. We got this high. You make a higher low and a lower high. Another lower low, but it is also still higher than this one. And then a lower high, all these lower highs and lower lows, which is always going to create that of a symmetrical triangle, which is just as simple as having a valid uptrend and a valid downtrend line in play at the exact same time. So there's a valid uptrend line, and I don't know how you want to draw one of these in, but however you look at it, it's also trading within a downtrend. So this thing is going to have to break out obviously to one side or the other, but oftentimes when it does, you can consider the breakout or breakdown to be that of volatile and explosive. Not always, but we'll see. Take care.